Today is Monday, November 19th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADM Investor Services Senior Financial Economist. Alan, let's start with the finances this morning. Recently, several Fed Reserve officials have voiced concern about a possible slowing global economy. Does this change the outlook for Fed policy for the rest of this year and into 2019?
No, it does not change the outlook for Fed policy this year. It still appears that there's going to be another rate increase at the December 19th meeting. However, the probability of that rate increase has diminished. A couple of weeks ago, it was around 82%. Now it is closer to 70%. So it still appears that the Fed will be raising in December, and I am totally on board with that outlook. But I do believe, and this is contrary to the consensus view, I believe that there will be no more than 2 rate hikes next year. Most analysts are looking for 3 or 4. We even had one bank a couple of weeks ago calling for 5 rate hikes, which I thought was rather hard to believe. So only 2 more rate hikes next year, and that very much is not in the mainstream view.
Alan, if there's 70% of the street expecting a Fed increase, is that factored already in the market? And conversely, if they didn't do it at the December meeting, how would the markets react to that?
Okay, that is already factored in, and we're already starting to see the credit futures markets advance. No rate increase would be a major surprise. That would cause stock index futures, I would have to say, to, maybe I should not even use the word skyrocket, but there would be substantial gains in the stock index futures if the Fed does not raise rates in December.
Steve, I'm going to throw this next question at you. What is the outlook for the trade situation between U.S. and China?
Well, on Friday, the people were saying that the U.S. did kind of a good cop, bad cop type thing. The President of the United States said he wanted to talk to them, and China president sent a list of things that they would do to get a deal. But at the same time, the Vice President of the United States said that China is a military threat in that Asian part of the world. So the rhetoric on Friday today is perceived as negative and reducing the chances of any deal in 2018.
And I know you're watching this trade war as well closely.
Right.
What are your comments there?
Well, I think Steve is absolutely right. There is no clear consensus view as to when this trade problem will be resolved. I know Steve has mentioned in the past maybe later rather than sooner, and I believe that is the case, not till sometime next year. However, there will be a resolution, and I think at that point, or maybe in advance of that point, when it becomes more likely that something will be hammered out, we will start to see the industrial commodities turn higher, and it could happen very suddenly. So an agreement is coming probably later rather than sooner.
Now, does the slowing global economy indicate that the U.S. stock index futures are entering a bear market?
Not at all, and I believe this is a soft patch in the global economy. And if you recall, several years ago, we had quite a bit of weakness in the global economies everywhere, basically, even in the U.S., and yet stock index futures continued to advance as interest rates remained low, and the Fed was rather slow to raise rates. I think this time around it's going to be central banks to the rescue. Central banks that are accommodative are going to remain accommodative for much longer. Central banks that are hawkish, such as the Fed, maybe I should say the Fed had been, hawkish is now likely to be more likely to scale back those hawkish comments. And in fact, we've had some recent comments that were a bit on the dovish side, especially from Kaplan of the Fed recently. So stock index futures will probably hold, and I would expect to see some new record highs in the second half of next year. And again, it will be because the central banks around the world will respond with less aggressive rate hikes.
Steve, turning back toward the grains, looking at some of the numbers, is there a private estimate for the U.S. 2019 acreage by crop? And could you comment on the world 2019 and 20 carryout and price outlook?
Well, first of all, one private group came out on Friday, and basically we're talking about maybe as much as a 5 to 6 million drop in bean acres, and they also thought that there might be somewhere between 4 and 5 million increase in corn acres and 2 million increase in wheat acres. And so when you look at the charts, the bean market is kind of holding at a level that might be considered higher than what the fundamentals suggest, and corn and wheat are testing the season lows. And some part of that could be talk about farmers shifting bean acres to corn and wheat acres next year. The same group came out and said that there'll be an increase in global soybean stocks next year. There'll be a decrease in corn stocks, and there'll be an increase in wheat stocks. So it just looks like there'll be a burdensome supply, especially in wheat and soybeans. And the corn stocks numbers are all messed up now because of the USDA doubling the size of the China supplies. But it looks like non-China corn supplies next year will be a little tighter.
And Steve, what do the technicals look like? I know we've been trading in ranges and beans and corn. Where do you see support and resistance, and do you think we can break out of these recent ranges?
Well, in March, corn has been trading between 370 and 390, and I think we'll still continue in that price range. At the higher end of the range, the farmers, if they've got old crop corn to sell, they should sell that. If I'm an end user and I'm at the lower end of the range, you should be probably buying that. There was one group that said that if we look ahead at fall of 2019, we got December 19 corn futures trading at 397. They think it'll go down to 365 by the fall. In the beans, we've also been trading in a broad range between $8.40 and $9. Again, if we trade to the higher end of that range at $9, you probably should be selling cash, just like end users should be buying at the lower end. But it's almost impossible to trade beans right now, given the uncertainty of a trade deal. We could trade well over $9.50 if there's a deal. We could trade below $8 if there's not a deal. So it's almost impossible to trade. But that same group said, but in the fall of 2019, bean futures will be trading around $8.15. Right now we're trading at $9.24. And in the wheat market, if the supply goes up next year, we made new lows for the year today. And so the next support is at $4.80. And they said that next year we're looking at December wheat trading at $5.50 today. It could trade as low as $4.60.
Finally, Steve, the crude oil market has been in a fairly steep decline. January futures have fallen from its highs in late September over $76 to the current level of about $55. What's the story in the crude oil? Do you see this market falling much further?
I think there's two things. I think the market is concerned about China's economy declining and then reducing the demand for energy. And then I think there's also been some talk that some of the Saudis may have increased supply after the United States imposed sanctions. And here in the United States, we still have too much supply of crude oil from the fracking. So if the economy's slow and we don't have a trade deal, and the Saudis and OPEC continue at current production levels, we would think there'd be more pressure on the crude oil market.
Classic supply-demand scenario.
Classic supply and demand scenario that is almost 180 degrees different than what we thought a couple of months ago when the Saudis cut production, world economy was growing, and everybody was talking about $100 crude.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.